IHS Towers, the biggest operator of mobile phone towers in Africa, is on course to become the largest Africa-focused company on the Wall Street if its New York listing goes ahead this week. Also, Nigeria's Vice President Yemi Osinbajo is calling for a review of the exchange rate to reflect current market realities. This, he says, will help to improve dollar supply. I have Sam Chidoka, CEO of Kairos Capital, joins me now to weigh in on these issues here. Thank you so much for your time today on the show, Sam. Let's first get your take on the developments we're seeing play out with IHS and their Wall Street listing.
Hello, Ken, and thanks for having me. So we've seen IHS Towers go second time to get listed on a foreign bourse. The first time didn't quite pan out well because at that time, market sentiments were not quite right for a listing in 2018. And now we hear they're going back to be listed on Wall Street again in 2021. It all looks good for IHS at this time. Numbers are looking good. You have EBITDA growing at 21% year on year for the past 4 years. If they continue going at that level, you're probably going to have a unicorn sometime in this year, or maybe by the time they release their December results, you probably have a company valued at about $1 billion or thereabout. And so I think that it's good for the market. It's good for a company that started in Nigeria, has its roots enshrined in Nigeria, has most of the infrastructure enshrined in Nigeria. And so I think it's good sentiment for the Nigerian capital market, for the company, and one is hoping that they continue to do well going forward.
All right, but looking at the ripple effect of this, though, do you think we'll see that likely impact of this IPO on MTN?
Well, so how it affects MTN as a company is neither here nor there. I know that they are also shareholders of the company. I think they own somewhere around maybe 20% or thereabouts of IHS. And so if IHS continues to do well on a consolidated basis, and MTN definitely will continue to do well based on consolidated earnings from the company. So it's good for the shareholders, but remember that they also have numerous other shareholders, especially notable shareholders like IFC, like Investec, like FMO. And these are shareholders who you expect to bring a lot of corporate governance into the company. So unlike the not so recent listing that we had of another Nigerian e-commerce company that didn't turn out so well, we expect that with the corporate governance that led by the investors and shareholders and board members and leaders of IHS, we expect that on this time around, we will get it right.
All right, the company is estimating a price between $21 to $24 per share when it gets listed. Do you think this is adequately priced?
Well, so, valuation is not a science. Valuation sometimes is also about where the market is, where the market places that the company understands. Now, if you do a comparative analysis between IHS and other competitors, you will see that it's even priced below what it ought to be just based on reviewing the forward-looking multiples. So if you look at some of the companies that are competitors are trading at 18 times, while this valuation points to somewhere around 12, 13 times. And that shows you that what they are priced in is perhaps the risk of Nigeria has been priced in to price at that between $21 and $24. Also, if you look at the quality of the advisors that they have Goldman's, they have, Investec and all top investment banks are advising them on this and doing the valuation. One expects that they'll be priced well. Even the underwriters are notable underwriters in the world, and they won't take a dive into the share if they feel it's not been priced properly. So I think that by and large, valuation is better now than it was, perhaps better than 2018 when market was a bit choppy. Today is a better, more stable market. And I think that it can only grow from here because we expect that when you have EBITDA growing at 21% for the past 4 years, if you continue in that direction, then we think that it's going to be a good company. And investors who buy it now will probably make a kill going forward.
All right, let's move away from IHS and get into another story I wanted to wade in here. I'm talking about comments here from the Vice President around the FX rates. First, let me get your reaction to those comments.
Yeah, well, so Ken, I would say that I look at it from two ways, right? First of all, I think that the Vice President has said what I consider to be the reality. You can't, the market, perhaps what we call the black market is a better reflection of where the rate of Naira is than the official rate. But I think that CBN has been trying to collapse and have, some congruence in terms of the rates. But what the vice president said in one breath, for me, is the right thing. Don't try and, don't try and put a value that the Naira just doesn't have. However, where I worry is this statement coming from the presidency, as it were. I think that he said the right thing, but perhaps he said it to the wrong audience. I think perhaps that's a conversation that should have been between the vice president and maybe the managers of the currency. Because again, you remember that markets react to information. So when the vice president says that we have sort of overvalued the currency, anybody who wants to play against the Naira can take that as a cue to mean that there's going to be another devaluation, and then you can, sort of take advantage of that and make a kill, and that would adversely affect our currency. So I think it's the right thing said, perhaps to the wrong audience.
All right, still brings back up the question around FX management strategy. But in your view, if we're going to rethink FX management strategy, where do we begin then?
So I think that the first thing that and then again, on that breath, I agree with the vice president that we need to rethink the whole process. I think that we just cannot have too many windows. There needs to be a convergence of pricing. And we have to allow the currency to trade more within markets. Let the currency trade more. A situation where you have a fixed official rate, and then you have other rates that are that gives different signal. You have 4 or 5 different rates in the market. I don't think it's best for the currency. I think that in rethinking it, we have to find a way to make it. I'm not saying, some people have argued that we should just completely free float the currency. I do not think that many countries completely free float their currency. At some point in time, the regulators will have to intervene and make sure that the currency is trading around about a band that they expect. But I think that we should loosen it a bit more and allow markets to determine more what the price is. And then you will find that this issue that we have, where people were getting money from the CBN and getting a huge premium by trading in the black market or alternative market, will not happen anymore when these prices or exchange rates begin to converge. So in rethinking it, we must think markets. We must think about allowing the currency to trade nearer to its real value than a suppressed value.